Okay, everyone. Well, welcome back to the second event in the DeFi Club series. This is a general education series running across 10 weeks to educate whoever wants to join about blockchain, about DeFi, how you get involved, explaining it from first principles, showing you cool stuff, bringing some great speakers and projects in to kind of really elucidate everything to do with DeFi. I'm Anthony. I'm CEO and founder of Encode Club. I've mentioned this last time, but I'll go through it again. Point of Encode is to educate, support, and back both university and general hacker talent and blockchain, and really bring in the next generation of talent to the space, particularly at this time when there's so much more money and attention. We need great talent, and we hope, especially some of you learning about blockchain eco for the first time, that you're really going to get deep into the space and have a great time and do great things and hopefully work and contribute over the next few years. This is the kind of education aspect of what we do, or the workshops aspect of what we do, and there's many more opportunities on the hackathon side. I can talk about that a little bit later. We certainly have from Vega. Vega participating in our hackathon concurrently with this, and Vega are going to be talking to us today. I won't mention any of this stuff. The Discord, George has kind of pasted the link in chat, so please do get involved. There's a basic verification just to be all safe. And as a general rule, everyone, please, this is a safe, nice, kind space. So if there, be nice, be respectful, and if in the unlikely event there are any bad actors that join us today, please do flag to either myself or George as quickly as possible, and we will get that sorted. It does happen in a very small number of cases, and we will kind of stamp that out absolutely immediately. To reiterate what DeFi Club is, it's an online 10-week cross-university education initiative that is a tongue twister to promote and accelerate the adoption of DeFi to students, and more generally, I use students in the most broadest general sense. Kind of everyone who wants to be a student of DeFi can learn about it, and it really is open to anyone. So the technical content of this event is not going to be too deep. Some of the events will get more technical, some will be less technical, but the general point is to make this nice and inclusive and fun for everyone involved. We're in week 2. Next week we have a fantastic AMA with Arthur Brightman, kind of co-founder of Tezos, one of the kind of biggest layer 1 blockchains in the space. We have another one on the DeFi product stuck in 2 weeks, where we're going to do a few more case studies, and then we are about to confirm 2 great AMAs, one with kind of Kane, the CEO and founder of Synthetics, and one with Hugh Karp, founder of Nexus Mutual, and one of the biggest insurance kind of platforms in the space, as well as some technical events on building on DeFi, and also getting hired in DeFi to come up over the 10-week period. Thank you to our sponsors, Arv, CoinMarketCap, and Vega for making this series happen. It allows us to kind of put the time in and kind of focus on kind of bringing this series to life. So thank you to our 3 brilliant sponsors for enabling us to do this. I'm going to do a whistle stop about what happened last week for anyone that missed it. This basically involves me going through all the slides very, very, very fast. I'm going to try and do it 2 to 5 minutes. Someone can time me. We kind of introduced the fact that DeFi, to understand DeFi, you first need to understand TradFi and traditional finance. And typically it's these things we mean, but basically it's everything that you can associate with broadly with a bank. If anything a bank does is broadly finance, and the whole point of DeFi is to disrupt this and to basically say in one simple way that code is law, that everything that you can a lot of great things in finance you can boil down to very simple if-then statements. If this happens, do that. If this person sends money, record it in this way. If you're trying to send money to here, make it go through this place. All of this kind of stuff effectively can be summarized as code once you get down to it. I'm going to talk today about what are the specific projects, code base, technological, brilliant projects, and how they're doing it and trying to disrupt bits of finance that banks and traditionally have been kind of monopolizing. But in general, this principle is that code is law, and that the best way to think about all of this is A, in terms of money as Lego, but B, in terms of money as a spreadsheet and a database. And once you think of money as the database, and the banks kind of control this database, you don't necessarily have to have the banks as the central party of this database. This could be something that we all kind of maintain together, which is broadly the point of the blockchain, without going too deep into the blockchain. If you do want a technical introduction to blockchain, George, please paste the link to last Tuesday, we had an intro to blockchain series or events with Lawrence Kirk, and we tend to do these events periodically as well. So if you want to get a more kind of deep dive into blockchain, Lawrence's event is fantastic for that. I'm not going to go through any of this too much, nor are we going to watch the Big Short again, but just leaving you this principle that crypto imagines finance from scratch based on this idea of programmable money. And fast forwarding, and where is the slide I wanted? Yeah, I want you to think today of money as Lego. This is kind of the main point, and that's this idea of composability, that once you break kind of finance into little pieces, you can start rebuilding these pieces back together and build cool things out of them that you didn't think possible at first. And the way I want to structure this event is actually incredibly kind of demo orientated, which is I'm going to go through broadly. I did this very kind of terrible map, but there's just what the kind of examples of things we're going to go through. So I'm going to give you a whistle stop tour to all these different kind of essential areas of disruption in DeFi and the cool products that are emerging in each. We're going to try a few of these products. I'm going to teach you kind of how to get set up, and I want you to, if you haven't already done so, to try them yourself. And also, I'd love it to be the case that you kind of also go on your free time and try it and play with this stuff, because it really is quite exciting, and a few tips and tricks along the way. We will try not to give any alpha leaks. There are some projects that we like and so that come out of Encode that we'd love you to try as well. And then we'll finish with a great talk by Vega on the derivative side, one of our sponsors there, and Tamlyn is here to kind of do that. So the way we're going to structure this is, first and foremost, we're going to go into layer ones. And we kind of touched on this kind of last time, and we're going to do this through the lens of CoinMarketCap, one of our sponsors. And for a lot of you, this is who are kind of new to blockchain and kind of like, how do I get started with this stuff? What is this DeFi thing? How do I get interacted with it? You kind of, this hopefully should very much help kind of put you in the perspective of someone who's used DeFi a lot, played a lot, and had to kind of get involved with all the first steps. And the first step I always say to people is kind of look at the market and see what these numbers are on a screen. And to go back to the slides very quickly, the TVL in blockchain, the total value locked, the amount of money people have put on it is quite crazy. This is not quite showing perfectly, but if I move this out of the way and get this back, you have basically almost 50 billion kind of dollars of capital locked in DeFi, and we'll talk about what locked means. But this is an incredible amount of capital, and you might say, look, yeah, but this isn't that much in the grand scheme of things. Like, banks are worth so much more, but actually, still a huge amount of money, and it's a huge amount of user base, and it's quite impressive that we have systems in blockchain that are battle tested enough to hold that much money with fair degree of confidence. But I want to kind of start with the price. And we mentioned last week a few kind of different projects, obviously Bitcoin and Ethereum. And I want to touch on this thing of layer ones. So layer one broadly, and the most famous one of which is kind of Ethereum. A layer one broadly is a blockchain. Is the actual platform, the whole infrastructure you build everything on. But it's not obvious that necessarily that that Ethereum is not the only blockchain in kind of simple terms, and I'll talk you through a few of the ones, and I want you to go away please in your spare time and have a look at them. A lot of these ones are people we've worked with in the hackathons and the accelerators, and that you can get involved with in future accelerators and hackathons. But the original one, of course, is Ethereum. It's a very kind of simple, well, it's not simple, it's very complicated, but the main innovation that Ethereum brought to the space is smart contracts. And Ethereum by far has the biggest community. It has the biggest kind of engagement factor, and that's kind of reflected in the price, but also the overall development activity that goes on in crypto, and the amount of projects, the amount of infrastructure, and the amount of tooling that's in there. And for those who want to kind of deep dive into this, there is a kind of change to Ethereum happening now called ETH 2.0 to kind of blockchains aren't perfect, and the reason they're not perfect is kind of slightly to do with this. I'll talk about it now. We introduced the idea of gas, I think, last week, which is basically a kind of fee you have for kind of helping transactions go through. And in recent times in blockchain, in crypto, gas prices have been very high. This is actually quite a low week, but in general, they've been crazy amounts. So if you wanted to do a basic transaction, like send some money or to make a trade, it would cost you hundreds and hundreds of dollars, which is really unsustainable, especially if you guys are students as a kind of first step into blockchain. You're like, I can't be spending like $300 to send money to my friend. Like, that's untenable. Like, I don't have $300 to kind of start with. And so not as a product of this, but before this, other layer ones emerged, and all of that they're trying to do is all that they are trying to do is sorry, I completely lost my thread there because the message came in. All they're trying to do is do different ways of making a blockchain fast, scalable, secure. And we're going to go through a few of them now. So the one I kind of want to start with here is one that's kind of received a lot of attention recently because it's a very good kind of counterexample to kind of Ethereum, which is Binance Smart Chain. Now, Binance is an exchange most of you would kind of know about. And what they are is effectively a complete copy of Ethereum, but they have fewer nodes. They actually have 21 kind of validators, people who are kind of verifying the spreadsheet is correct, verifying the kind of database is correct, and that they have kind of received a lot of kind of mainstream attention in recent weeks. But they're kind of the first example I want to show you is things that are copies with various little changes of Ethereum. Binance Smart Chain is one for you to go and have a look at. They were involved in the last hackathon. Another one is something called Polkadot, which again most of you will have heard of, particularly because they've done. Again, if those of you that are kind of inclined to look at prices, they've done particularly well. Most things in blockchain have done particularly well recently, but Polkadot takes a kind of different approach, which is to one of the main problems with blockchains is that blockchains are you've got a lot of transactions kind of happening that you want to kind of get through, and you've got to know how you kind of deal with this fact and how you kind of make the network run quickly. And Polkadot's approach is to effectively shard these transactions into lots of little pieces and deal with them with kind of mini blockchains within one, which they call parachains. The point of this workshop is not to kind of go into too deep about how these projects work, but just to give you a kind of taste and some ideas of cool projects. Another one to kind of have a look at is Avalanche, which was founded by Professor Emin Sira. They are kind of more focused towards the kind of, they very much focus on the financial kind of side of things, and they actually, we have an accelerator going on with them in the next 20 weeks. Another one to kind of look at. Another couple cool ones to look at. You've got Algorand, and this is very much, I'm sure I'm going to miss obvious ones here, everyone. So if you do have ones you're like, oh my God, Anthony should have talked about this, please do have a look. This is founded by Silvio Mercalli, which is a Turing Award winner and quite a famous kind of computer scientist. I mentioned Tezos before as well, who founded by Emin Gunsira, not Emin Gunsira, Arthur Brightman, who we have an AMA with next week. But for all of these, and I've missed one more, which I'm going to kind of talk about now, two more. Near Protocol, which is another one that kind of doing the kind of sharding approach and doing it in a cool, innovative way and can really focus on the UI and the UX. And kind of last but not least, another one to kind of keep your eye out for is something called Definity, which is launching very soon. Again, point is not to kind of explain necessarily all these, but give you a taste. And the layer ones are actually the least interesting bit of this. What I want to talk about now is something called layer 2. And layer 2 is basically the problem that here, as I say, this is these numbers don't mean anything to you. Red just means gas price is very high, but it means it costs a lot of money to kind of get transactions through, and because of that, you're not going to want to do as many transactions per second because it's going to be too costly to do so. And so layer 2 basically says, all right then, why don't we take some of these transactions and move them off chain? We're going to probably dive deeper into this into later events, but to give you a taste, if you do want to kind of introduce things like, oh yeah, I believe blockchains are too slow, they're not scalable, how do you fix this? So a few to kind of look out for. Kind of one's called Optimism, which again, we won't go into too many things, but one to have a look at. Another one is called Off-Chain Labs with Arbitrum. And the last one that I would definitely have a look at is not sponsoring the current hackathon, Polygon, formerly called Matic, for showing my football fan tendencies. And these all try and do things of taking transactions off chain so that you compartmentalize them, deal with them in their own right, and then bring them back to chain where you can kind of process things more quickly. This is kind of the more boring bit, kind of the basic stuff. And now I want to kind of talk you through some basics of like getting involved in DeFi. And the first thing is that you should set up something called a wallet. Now, a wallet is, as you might suggest, I mean, you have a wallet like this, if that shows. This is a physical wallet. But in crypto, you have a digital wallet. And the reason you have a wallet is that every kind of account is an address. Yeah, imagine it like a Google account. Except it's decentralized and you have better access over it. And this right here, we're going to look at Ethereum because a lot of the DeFi infrastructure is on Ethereum. This right here is something called Etherscan, and it's where you can see all the addresses in the world. And so if I were to pick, let's see if I could pick a random address here, address is basically an account, as I said. I can see all the transactions going in and out. This is the wonderful thing about blockchain. It's kind of public and you can see what's happening with a layer of anonymity that comes from the fact that this is a line of digits. Each address is a line of digits and letters, and it's kind of hard to work out necessarily, unless you can do it, but it's hard to work out who is who. So the first thing you have to do to engage in crypto is get a wallet. A wallet provider, so you can interact with this address and do transactions. The most famous one is MetaMask. So let's hope that displays. Let me put a password in. So this one has some Ethereum in it. This has some USDC. This is not my main wallet, everyone. Before you you can look at it. It's just a random wallet I use. This, I can have all my cryptos in here. I can have all my kind of stuff that I've interacted with. And I use this as kind of the passport to interact with the kind of DeFi world, which is nice and cool. The other ones you can look at, one is called, if you want one on your phone, it's called Trust Wallet. This is quite good. You can have Portis, one of our good sponsors in the last hackathon, and there's many options you could choose. MetaMask is the most famous one, many others. If you want to get free, if you're dealing, by the way, using something like Coinbase is exactly the same, but you can't use it really to interact with other kind of kind of web-based blockchain applications. What I would say is if you're going to be dealing with kind of larger amounts, maybe anything over really £1,000, I would recommend getting something. Let's see if I've got mine to hand, something called a ledger, which basically keeps all my information about my access to my wallet and my addresses on a piece of hardware. And the reason why that's important is I have to sign a transaction. I have to physically press a button on this thing every time I want to send money, and that means that if someone hacks my computer, they can't do anything without getting this thing physically. So if you are going to do with anything really above £1,000, even less, buy yourself a wallet, a ledger, and get set up. We have some dedicated tutorials on how you do that that we're happy to share if you want to kind of learn more about how a ledger works. But in general, you start with a wallet. Now we've done the kind of core basic stuff. So after you've got a wallet, you might be thinking, okay, Anthony, this sounds great, but what currencies do I hold? Now, this is certainly not going to be an event where we kind of tell you what to buy or not to buy, but I wanted to introduce the concept of a stablecoin. Now, a stablecoin, let's take one like Tether, is a coin that keeps a stable value. And the reason why this is important is, let's see if this loads quick enough. Oh, it's asking me to sign up. That's not good. There we go. The issue is, if I look at Ethereum, it's extremely volatile. In the last 7 days, it's done 13%, but that's quite a normal day for Ethereum. A normal kind of, or that's a fairly tame week. It can often do, if this is going to load for me, it can do 10, 20% a day, which means if I send George some money and a week later they kind of forgot about it and go to check it, it might have moved like 30, 40, 50+%, which is terrible because you lose a sense of what the original value was that you were trying to send. So we have these things called stablecoins, and the most famous stablecoins are something called DAI. Where are we going to go? Apologies, Wi-Fi speed is affecting. And these are an example of a dollar stablecoin. Stablecoins that use some mechanism to link them to the dollar, and we'll talk about how we input real-world information. This is one good example. USDT, Tether, is another very famous example. Again, this is complete pegged to the dollar, so it's always worth $1, and there's various mechanisms to do it. You have one called USDC. These are the three kind of more famous ones, and we've started to see some innovations around this towards kind of cooler systems, maybe purely algorithmic stablecoins. If we look at something like Basis Cash, see if they're linked, that don't necessarily target $1. This is a bad example because Basis Cash is you can see quite unstable at the moment. Or if I go for, let's go for empty set dollar as an example. Also not particularly stable. And this is why you get the emergence of other kind of coins like Rye. This is a former kind of hackathon winner, or the third place in the hackathon a year ago that's gone on to do particularly well. So this tries to stay around kind of $3. I really hope the chart kind of emerges. Yeah, it's kind of trending in a fairly kind of small range there. And others that have emerged, which come out of the current hackathon, if anyone wants to have a look, Float Protocol has been doing very well. They came third in the hackathon that finished a month ago, and they they currently have I'll talk about what a farm is in a moment, but they currently have a kind of a launch going on, and they're going to be a currency that doesn't necessarily is stable in the short term, but doesn't necessarily have to stick to a particular value over time, and can move like a normal currency, like a dollars and pounds. It can move over time depending on what's happening in the underlying economy. Stablecoins are very important because they allow us to give a sense of stability, which means you can make trades with confidence of what value you're trading in. But part of having a stablecoin is actually, stablecoin is one thing, but another essential part, and to go back to kind of our kind of vague map, is once you've got wallets and stablecoins, you need oracles. Basically, you need to tell blockchains that they have what's happening in the real world. The most famous one of which is something called Chainlink. Again, you might have heard of it, the token of which is done quite well, but this gives you kind of decentralized ways, decentralized networks to provide kind of tamper-proof and reliable information into blockchains. There are others, we'll go through a couple now, but this is very important. If any of you are going to be building smart contracts, you want to have a good Oracle provider as part of it. Other ones you might be able to use are Band Protocol. By the way, the slides, or more importantly, the video will go live afterwards if anyone wants to go back and look through some of these projects. Band Protocol is a very good example. Teller, who were in one of our hackathons, one of our last hackathons. And what each of these do is they're trying to solve a pretty hard problem, which is how do I make sure it's no good saying, okay, we have a great blockchain, we have Ethereum, I'm going to get Anthony to tell me what happened, tell the blockchain that, I don't know, maybe I'm doing something that says, if Arsenal win, pay everyone £10, or pay these 10 people £10. And so there's quite a simple smart contract. How do I tell it's that Arsenal win? It's not good enough to just point to a website, because the person that maybe put this website link in the first place might not be reliable, or the website link might fall apart. You need to create a decentralized network whereby we don't just trust one party, but we have a system whereby we trust lots and lots of different parties' opinions in order to get the right result. And therefore, you need to build quite complicated networks in their own right in order to do this. So oracles are kind of a very essential way. If we're going to have blockchains interacting with the world, we need oracles. I will take questions when they're there. We're going to try and kind of power through. So this has been, we've kind of done I would say the boring stuff, layer 1, layer 2, oracles, stablecoins, wallets. I now want to go into, like, for me, one of the coolest things about crypto, which is the decentralized exchanges. And we'll do it through the lens of something called Uniswap. And this is the most famous example. And what Uniswap is a place where I can trade not with a central party, I can trade with other people. Now, it's not peer-to-peer. It's not that that it's connecting two parties together who don't know each other. It does this by way of a liquidity curve. And I'm not going to kind of go too deep into this. You can kind of look into it. But a liquidity curve, basically, I add, let's say I want to become a liquidity provider. I want to offer my tokens to the market in exchange for some fees of, I don't know, 2 tokens. Let's go DAI and ETH. Then I would put in a 50-50 ratio of ETH to DAI into this pool. And then if people wanted to kind of buy tokens, they'd buy it off this pool. So they'd send, if they wanted to buy ETH, they'd give some DAI and get ETH back. And the price of each asset is relative to how much ETH and DAI is in that pool. So if there's only DAI, and no ETH, then the price of ETH relative to DAI will be very expensive. It will be kind of very high. Uniswap is so cool. It's like, it's such a, it completely twists kind of exchanges on its heads. And it does mean that I'm not going to kind of do this now, but if I were to do it, I'd go to MetaMask. I'm on the wrong network. This is why you never do stuff. I have no idea why I'm on the wrong network. Okay, love how that fails. It is right when I'm doing a demo. I'm definitely on the right network. Anyway, I think I had a custom network set up before that. Anyway, I would go, I want to swap this. It gives me a price. It tells me what the price impact is, and I get this much tokens in return. I'm going to take some water because my throat's very dry. And this pretty much settles instantly. I pay some sort of gas fee, etc., etc., etc. Now, the great thing about blockchain is, okay, for some of the infrastructure stuff, there you saw there's lots of competitors, lots of layer ones, there's lots of layer twos, etc. But on a kind of next level, when you deal with stuff like DEXs, you can literally have moments where people copy and paste the code and start again. All this code is absolutely open source. Let's see if we can find the GitHub. So all of the code for, maybe not the front end, but all the code for some of the Uniswap is quickly, like, imagine this, like if I went to, I don't know, the FTSE 100 or the Dow Jones, that code's not public normally. You don't just get that kind of public and accessible. But in blockchain this is, and which means people can kind of fork it and start again. Forking means copy and paste and start again. And so you get stuff like SushiSwap, where someone literally did that. They said, I want to do this slightly differently with slightly different rules, a slightly different kind of approach to it. And this is a complete kind of copy with the difference. And you get this in blockchain, and they get popular they become popular, people engage with them. And this is one of the coolest thing about crypto is you have, if you don't like something and you think you can build a community around it for a new version, you can copy and paste and start again. The power is with developers, and they have a ton of liquidity as well. The other thing is, if you've got all these things like I've just said, Uniswap and SushiSwap, and you're like, well, this is great, but like I want to combine the use of Uniswap and SushiSwap together. You get aggregators, and such an aggregator is, that's one example, is 1inch Exchange, a very famous hackathon kind of winner, won a ton of hackathons back in the day. It's not going to load now, is it? And what this does, if I try and swap, let's see if it's going to do it. Don't be slow. Come on. Normally, it would show me a ton of options here. Please show me some options. Okay, I have to come out. We'll come back to, oh. Okay, so it'd say my option is to go from ETH to WETH, which I'm not going to talk about now, into DAI via Uniswap. Others, if I go to more complicated, let's say I want to go to, why are you reloading? Come on. Okay, I might come back to 1inch. Oh no. Let's say I want to do something complicated. Let's go to a link, for instance. Okay, brilliant. Here are all the decentralized exchanges, and it's saying, okay, what price can I get on each? And then it will try and find the kind of quickest path to do it and the cheapest path. Again, really cool. Imagine doing this. Imagine like, yeah, imagine the equivalent in the real world. There just isn't one. It's just not, and all of this is kind of decentralized, and there's no central party in the way. And if I want to start again and I want to build bits together, I can. So DEXs, AMMs, kind of aggregating all this are pretty cool, but you also need lending. And for lending's really important, because I talked about last week. If you don't have lending, you can't go short. Shorting is bet something goes down. It's that I think, I don't know, Anthony stock is going down, so I go to George and I say, okay, George, I want your lend me some Anthony stock. Here's some collateral, and I'll pay you a fee for doing so. I then immediately sell this Anthony stock, and then I think 2 weeks later it goes down, it goes to half. I buy that Anthony stock back. I give George his original amount of Anthony stock, and I keep the difference. This is shorting. But to do that, I have to borrow. And you also want borrowing because people want to get an interest on their kind of capital. And the most famous example of which, and my laptop is going to be horrifically slow now. The most famous example of I'm going to not do that, is Compound. And you can see here that anyone that wants to kind of get interested, they can get so DAI is a stable coin, so it's not going to change in value. You get 7% interest rate on this. Imagine thinking in the more world where you can get 7%, 10% interest on USDC, 12% on Tether. Like, come on, you never be able to get this. Yeah. So you can have a look there. Another version is Aave. Aave, obviously one of our sponsors, who, come on. The issue with this is it's a variable rate. For those who don't know kind of what a variable rate is the rate can kind of change. Oh, please don't do that to me. I'm not connected to mainnet. Let me figure this out. I just can't be bothered to do this now. Aave does much to similar things, but we will have more Aave demonstrations to come. But you might be thinking, well, actually, Anthony, I want to guarantee that this is going to happen. I want fixed rate. And then you have something called 88 miles an hour, great hackathon project that's come out, a student from America and a very good hacker who won one of our prizes before, and they'll offer you a fixed rate interest. Please can this load? Yeah, so right now I can get a fixed monthly and yearly kind of APY that they'll offer, which gives you a guarantee of how much money is coming in at the end of the month, which you can understand it is very, very important. There are aggregators for lending, just like we had for 1inch, and you can kind of check those out as well. So we've done DEXs, we've done lending, AMMs, derivatives. We're going to give, Tamlyn's going to give a wonderful kind of deep dive. But before I kind of wrap up this kind of whistle-stop tour of the kind of cool DeFi stuff, so you can have a taste and go away, I want to talk about this thing called yield farming, because actually it's a source of much speculation, but it's one of the actually coolest things about crypto, really. Which I know sounds kind of a bit silly, but it is. So I'm going to go to a very weird website called VFAT, which is what I am at the moment, VFAT. Not this person, as in my rotund state at the moment. And what is here is all these things called farms. Now, I'm going to immediately preface this by saying these are extremely speculative. They are a particular fundraising model. Please do not just randomly go into them. Please read up about the various things involved in them. I am simply going to demonstrate them as a really cool fundraising device, but there's no doubt they're over speculated upon, and you carry extreme risk of losing money. So if you do get involved with them, please do your research beforehand and always put in an amount and in general to crypto that you can use. But if I take a kind of example of this, what a farm basically says is this. It says, okay, future users, if you like our idea, why don't you stake some capital down, which is kind of a token of your bet, or a rough indication of how much how excited you are about a project. In return for which, we will give you some reward in a future token. So if I think everyone, Anthony project is going to be amazing, I'm going to open a farm up, and I'm going to say to you, put your capital down here, and in return, I'll give you some Anthony coin. Now, the value of that Anthony coin effectively can be, if enough of people do this, there's enough people kind of getting this token. But this kind of amount staked, this total value kind of put in there, kind of also represents how much people think it's going to go up. And that the more kind of money is locked in, the more people kind of think, oh, this is like quite a popular project. I maybe should speculate on this. I should get involved with this. I should pay attention to this. Now, at its worst form, actually, this is a Ponzi scheme. At its best form, its purest form, this is kind of a it's like, oh yeah, this is like, I get it. Like, I want this token. I think it's going to value. I'm happy to kind of stake capital relative to how much I'm stake capital based on the opportunity cost of it, of what I could do with that capital in return to get this token. And there's many kind of farms you could look at. And again, this is probably the most where crypto becomes most degenerative. But if I go to Sushi Swap, for instance, I mean, what this is going to do now is going to calculate the APY, but I want to, okay, let's take float, because I know float are doing one at the moment. And float's already open. So here you can put some capital down, you can take some DAI, you can put it down. You don't get access to it unless you withdraw it. It's completely able to be withdrawn at any time. And in return, this much bank, which is their token, gets distributed per day across relative, and you get relative to how much you put in, is how much you get. And you can have various ways to do this. So you don't have to do them just for fundraising. You can have kind of liquidity farms. Where if we go back to Uniswap and we go into there, keeps load fast. Yeah, you add liquidity here, and basically in exchange for the opportunity cost of your money, you get a fee, and you put your money down, and you can earn some interest by kind of putting your capital in, and many kind of cool things linked to that. This has been a whistle-stop tour of kind of cool things in DeFi. We're going to have another event in 2 weeks where we go even deeper. I haven't talked about actually insurance too much, or derivatives we're about to cover through Vega. There's many different aspects to this that I kind of haven't kind of talked about, but I want to kind of give you a taste of just how exciting this is so that you can go on and kind of try these products later. And at this point, I kind of, on this very specific matter, which is kind of trading derivatives, I want to hand over to Tamlyn to give kind of a talk. She's one of the co-founders of Vega, who one of our very kind sponsors for this series, and you can engage with their tech more fully in the hackathon if you want to get going. And I'm sure George will paste links to that effect. But Tamlyn, I'm going to hand over to you now to to tell us more.
Fantastic. Hi, everyone. Thank you, Anthony. I am just going to share my screen. And let's kick off. Now, I can't see chat while I'm presenting, but I would love people to feel free to interject and ask questions. And Anthony, please feel free to monitor the chat and break in and ask me questions anytime. So yeah, hi everyone, really great to be with you today. Really excited to take you through a bit of a deeper dive into Vega and really what we're designing and building in our sort of corner of DeFi, let's say. You know, what Vega is and always has been, that we set out to do very clearly, was to basically build a derivatives protocol that really could advance the world of trading, traditional finance trading as well, forward in terms of, you know, technical and market infrastructure, in terms of access, in terms of fairness, and many other kind of good things. And so really excited to take you through that today. So just very quickly about me, please feel free to reach out to me at any time through this email address or this Twitter account. But yeah, just a little bit about me. I spent many years doing derivatives trading in the financial world. I traded power markets, I traded weather markets, they're pretty crazy, traded carbon markets, I traded gas, coal, and so, you know, all sorts of things actually. And so I really learned how derivatives are used in the real world. I also did some high frequency trading and some proprietary trading as well, and then joined with, you know, Barney Ramsey and others in the founding team really early on in 2018 as we were thinking about how could you use blockchain infrastructure to not just make trading more efficient, but harness other properties of blockchains, which is to say really build out that layer of access and, you know, kind of cross global liquidity that you can get in markets because of the way blockchains operate. So let's have a look at financial markets. So look, financial markets they're big. There's a lot of money going through markets all the time, as you guys know. In fact, the crypto world is still pretty little. This is a little out of date, this particular diagram. But yeah, it's still in the scheme of life, crypto is still quite little. But, you know, the real world markets, the hedge funds, the gold markets, the stock markets, debt markets, they're all big, but there's nothing quite as big as derivatives markets. And that's because derivatives markets are about protecting these assets. They're about hedging. I don't know if you guys know that term, but it's about hedging, just means to sort of protect your financial volatility, basically, to try and lock in outcomes ahead of time, because really most shareholders don't really like uncertainty. And so derivatives are used really vastly across business, across enterprise, to help protect or help give certainty to future earnings. And in fact, if you look at this diagram on the right here, you've got this is a sort of estimate in how big the global derivatives markets are. It really depends how you measure derivatives markets as to how big you estimate them to be, but basically there's a lot of the big takeaway from this is it's really big. Some market estimates have it over $1 quadrillion, and that's really to do with how much value is locked up in these instruments. So why why think about decentralizing it? Why bring blockchain into the equation? I mean, is this just for fun, or is it for, you know, a good sort of economic utility purpose? And I would argue that, you know, really the way markets operate right now isn't fantastic in a whole lot of ways. Firstly, you know, markets themselves are still very fragmented. So you might think that we have global markets because we have the computer and we have the internet now, but as anyone who's ever tried to do a wire transfer, you know, between countries knows, there's a lot of layers of intermediate sort of steps that need to happen. A lot of people who are what we call rent seeking, so they're taking fees all along the way just to make a money transfer happen, basically. And what they're doing there is they're injecting the trust layer into the financial system. And as you guys probably know, if you're exploring blockchain, you know that blockchain's great as a replicated ledger, and through the trust models of blockchain at basically being able to disintermediate a lot of that activity. And so that's great, but as current like derivatives markets are at the moment, and all the sort of major financial markets are, they're still pretty fragmented, and they're also really hard to access. So, you know, there's been a huge increase in the amount of SMEs, so small medium enterprises, that in the last sort of 10 years or so have grown massively, and of course are conducting very global business. So you have a lot of global risk that they're taking on in terms of supply chain and so forth. But yeah, I'd say the sort of normal small medium enterprise isn't using derivatives to help hedge that, or to, you know, sort of insure against, you know, bad things happening. And I think, you know, with COVID, obviously, the pandemic was a huge thing that happened to the world, where businesses started to realize, many sort of small medium enterprises started to realize that, geez, they, you know, they weren't necessarily protected in the way that they thought they were. But what various research has shown is that smaller clients, they can pay a huge amount extra to access the markets. Not only that, exchanges and market people who are facilitating the market, they actually charge a huge amount in fees. They charge a huge amount for data. They've set up structures where basically, if you're wealthy, you get live data, but if you're not wealthy and not willing to pay for it, you lag behind the market, and therefore you're also paying more. So basically, you know, all in all, my view and the view of many people actually working in DeFi and crypto is that really markets aren't really working the best way that they can to serve humanity. So what's DeFi doing about this? As Anthony just walked through, there's a great ecosystem that's building all layers of the financial system. And Vega over here, we're looking at derivatives, as Anthony said. And so what is the purpose of decentralizing derivatives? It's really allowing people to offload their financial risk to someone else, another entity, maybe a professional trader, or maybe somebody who has the equal and opposite risk. And if you can do that in a decentralized way, what that means is you can create this global connection of people transferring risk. And you can do that easily, you can do it quickly, you can do it cheaply. Instead of needing to go register with an exchange, try and convince an exchange that your risk is worth, you know, them thinking about and putting a market out there for, this can all happen on this global risk liquidity layer. And so Vega, you know, we're doing some interesting things. One thing is, because we're building our own blockchain from the ground up, the blockchain can be designed to allow really cool features like gas-free trading. I think Anthony spoke before about how, you know, expensive Ethereum gas can be at the moment. Also things quite closely related, but, you know, we can build in really sophisticated risk models natively into the blockchain, and that helps with capital efficient trading. And you know, a problem that you might see if you dig into trading in any sort of serious way is the ability of people to potentially front run, or what this MEV the MEV just stands for minor extractable value, which is a problem that Ethereum's been having lately with some of the DeFi protocols as well. And it's where miners get advance notice or get the ability to choose and have quite a bit of power over the transactions going into the blockchain, because the ordering in trading, the ordering of when you can access the market is really important. I mean, consider, when the market's going suddenly dropping, or something bad's happen, like people want to be able to access the market quickly. And so, there's been all sorts of interesting, I like to think of them as experiments as the ecosystem matures, as people play around with this technology. But we've been designing Vega really to be really resistant to a whole bunch of the attacks that we know coming from the traditional finance world. Much of our team has worked in the front offices or built trading infrastructure, like for the London Stock Exchange for many years. So we've been quite aware of the things you want to protect against if you want these systems to be used one day by serious businesses and traders. So as I said, Vega is its own blockchain. It sits adjacent to Ethereum and other collateral blockchains. That just means that Vega isn't issuing assets itself. It's saying, hey, whatever assets exist on other chains, use that for trading, use that for placing collateral and managing risk and so forth. And so what happens is we have a bridge between the Vega blockchain and these other collateral blockchains. Our first bridge is to Ethereum, which is really nice. It means we connect really nicely into the DeFi ecosystem on Ethereum. But we've got plans and designs for connecting into other blockchains, including Bitcoin itself. So let's just talk through trading mechanics, because I don't want to assume that everybody on the call, fully understands trading. But let's first talk about normal trade. If you go buy a coffee, back in the sort of olden days when you could go to a cafe and buy coffee, but when you're located in the same place as somebody and you transfer money and you get a good back. I mean, this is the most simple example of what a spot trade is, and it's basically an instantaneous transfer of value. And what's really cool about Bitcoin is it allows that pretty much instantaneous transfer of value to happen now, like if you're half a globe apart from each other. And I find that really exciting. But what we're focused on is derivatives. So what if two people decide they don't really want the coffee right now? They just want to agree that at some time in the future, they're going to make that exchange. And that's basically a derivatives trade. It's a promise that at some point in the future, you're going to do some kind of deal, basically. And in fact, you do the deal back in the present, and then in the future it fulfills itself, is a way of thinking of it. And so in the future you have the exchange of the money and the coffee. But what is the big risk here? Of course, the big risk is that the other person doesn't turn up. Now, of course, for just buying a coffee, that's not super important. But if you're putting real business, you're doing a deal that is going to make a big difference to your business, it is important if they turn up. And that risk is called credit risk. So exchanges are a way, let's say an innovation of the last, 100 years or so, where they basically thought to themselves, let's figure out a system where peer-to-peer, you don't have to take on each other's risk. So the exchange itself plays the role of both matching buyers and sellers, but also basically taking the other side of every trade. And so in doing that, they're essentially removing the peer-to-peer credit risk. And they do that by basically getting everybody who's trading on the exchange to put a little bit of money into what's called a margin account. And then what they do is pretty much every day they look and they say, oh, well, look, the buyers of the market are winning or the sellers of the market are winning. And they basically do margin calls. I'm sure you guys have heard that terminology. And so they basically try and keep everything whole and balanced. And look, if somebody defaults, they hope that they've taken enough margin to be able to cover that default, basically. So that's basically how an exchange works. So what can a blockchain replace in this entire system? So we thought a lot about this and really figured out, and especially Barney, who came up with the original design, really figured out there's actually a lot that can be done on a blockchain, that you don't just need one centralized server or one centralized entity doing, but actually that a network of computers can do. And so price determination and matching, that's just running an order book, taking in the buy orders, the sell orders, matching them off against each other. Or, in another example of a price determination method that Anthony mentioned earlier is like an AMM, or a constant function market maker, which is just a way of sort of algorithmically figuring out a price. Other price determination methods include like auctions. And so an exchange just basically needs to do that. And of course, all of that can be codified and run on a blockchain. Then the second area is margins and netting. So that's the question of how much money do you take off every participant, and are you able to offset the buyers and sellers, and do you let people like go long and then go short and then go take their money and go spend it on another market before the time period is up? All this kind of what's basically referred to as sort of post-trade management is something, again, that can be codified and run on a blockchain. And what's exciting about Vega is we've got a really amazing quant team led by a lecturer at University of Edinburgh, a man called Dave Siska, and he put quite a lot of thought into how to best what best risk algorithms could run on a blockchain, and how that risk system should work. And when we compare it to even like the risk models that run on the CME or other major exchanges, we think that Vega has some really sophisticated basically contribution to make to the exchange space, both centralized and decentralized. And then at the end of the trade, or at the end of the market, there's settlement, and that just is about making sure that everybody, the people who win on the trade or the people who lose on the trade, get the money that they need. Or in the coffee example, it would be that the person gets the coffee and the person supplying the coffee gets the money. It's that simple. But also another aspect of markets that's good to think about is liquidity incentives. And again, Anthony sort of referred to this. You can see it happening in DeFi as people talk about different liquidity mining and staking collateral and making a return and so forth. And liquidity is really about the presence of buy and sell orders available, so that anytime any business or participant or trader comes along and wants to actually transact on the market, that they can, and that they can do it in a way that is not going to be too expensive, as in, they buy a little bit, suddenly the price goes shooting up. And so, liquidity incentives is a really interesting one. Traditionally in finance, on exchanges, they incentivize market makers. They go and they do business development deals, basically, and these deals can take many months to negotiate, involve a bunch of lawyers and so forth. And again, this is something that can be codified and algorithmically deployed, and so that any participant anywhere in the world could actually become a market maker or a liquidity provider on a market. And that's really, really exciting to me. And then there's the governance side, which is really about making sure that the network is running in a way that's good for the network, that the markets being created are healthy and good for the ecosystem. And so, again, that's usually the role of a centralized exchange, but you can, again, decentralize that and allow other participants to participate in that. So on Vega, we provide, the Vega network provides basically a market creation toolbox, and it's just bundles of code that basically help people to be able to think about what markets they might want to create. And this could be a community that's decided they want to do, I don't know, some sort of carbon credit markets based off wind farms that they've joined together and created. So the market creation toolbox, what it does is it allows people to design, create, and launch markets without needing to build all of that infrastructure from scratch. So one of the first things that Vega provides, and really at the heart of it, of the Vega markets, are these built-in product definitions. So it's, how do you define what is going to happen in the future? What, is it going to be coffee and money exchanged? Or is it going to be, look, an example might be a beer company might want to buy a weather derivative for the summer. And they might be like, if we have a really hot summer, we're going to sell a lot of beer. If we don't have a hot summer, we're not. So we'd like to buy essentially a hedge or insurance against it not being a hot summer. And so they'll structure some kind of product that would give them that payoff. So all of these things can be built into Vega, and we've just the testnet has got cash settled futures markets available, so you can basically build a futures market on anything. You could build a weather futures market, you could build an oil futures market, and it's really fun to go and experiment. I really invite you all to do that. But that's the built-in products. The other thing is these professional grade risk models that I talked about, and that helps the system basically manage all of the margining and making sure that people are paying up, and if they don't pay up, they also the system can basically close them out and pass the risk and the position onto someone else. So it's a really sort of sophisticated system that Vega runs on its blockchain. And then and part of that is the market management. So it's how the life cycle works for the markets. The Vega blockchain, for example, can put a market into a protective auction if the price is moving too quickly. And the idea is that if the price is moving too quickly, it might be market abuse. So let's slow everything down, put it into a 1 or 2 second auction, let liquidity accumulate, decide if this is a real price move, and so forth. This is all the stuff, the circuit breakers. You may have heard last March of many circuit breakers being activated during the Black Thursday market moves, and that's all built into the Vega blockchain. So all of these tools plus community is really important for any market. Everyone knows that you don't want an empty market. You want buyers and sellers and people who want to support the market, help give it liquidity, and so forth. So all of the sort of on-chain tools that Vega provides, plus the fact that the market creators need to really engage with the community who wants to use that market. But these things together really lead to opportunity. And that's what these represent, these little figures. There's like, the opportunity is endless. There's all sorts of types of derivatives that can be created on infrastructure like Vega, which is super exciting. I just got a very little gift to show you guys. This is our front end. If you want to test this out, go to testnet.vega.trading. And you can ping any of us on Discord or ping me on Twitter if you want. And I'm very happy to give you guys login details. But I'm just going to show you, this is a bit of a Bloomberg-y look front end that we've created that basically investigates the blockchain. And you can see what's happening here is, or interacts with the blockchain. So we've got some market proposals. So this is markets that are being proposed on the network. We've got a new market that has just been submitted. That market, that blob of data that just got submitted, it just had all the information about this futures market. And then people can pretty easily go and vote for or against this market. And so actually proposing and voting on markets is really pretty easy on Vega. And this functionality, at least in professional derivatives markets, has never existed before. So it is really exciting to me. So just stepping back for a second, I mean, why do all of this? There is basically, in my opinion, a need for humans to reclaim markets. At the moment, markets are controlled by a few entities globally. They are difficult to access, and that basically leads to a lack of fairness in the world. And so what is really cool is on Vega, Vega's going to basically be able to launch a whole new ecosystem of experimentation for markets, and people will be able to go and try new markets, replicate the current markets like the Eurodollar futures on Vega, but also, Bitcoin US dollar futures or yield swaps or anything you can really imagine. I'm very excited, and we get a lot of people come up with all sorts of ideas all the time. Actually, I'm going to run through a few of them. So, if you think about emerging or underserved industries, things like data breaching, right? That's sort of something that's emerged as a real business risk in the last 5 to 10 years. But really, it's not like there are data breach options out there in abundance. It's not something that a small, medium enterprise can easily hedge their risk on. Another emergent risk, obviously, is the Ethereum gas futures, and we've played around on our test net. We've had our community play around and launch different markets to hedge that. And of course, with the pandemic, it came suddenly, and market infrastructure wasn't ready to respond really quickly and easily to that. So all of these new market ideas actually have been supplied to us by everyday people, by traders we speak to, by market makers, by professionals. So yeah, it's another area, I guess another theme is extending derivatives to excluded people. And this is an area really close to my heart because I was born in Africa and I grew up there and I've done business there. And I do think that there's a real need to open up markets. I think it's good for the world in general. But I'm very aware of the fact that, we're becoming a more globalized market. I mean, there's a much more increase in, imports and exports and, internet business and all types of things. But this area of the economy and this area of markets has been pretty slow to adapt. So I think there's a real opportunity. I think there's a real need to extend this to excluded people. And then another area that's really, another theme that's really interesting to me is repackaging risk, because mostly markets get launched for really big things. And actually, you could launch markets for really specific, like localized types of risk and markets. But that doesn't really happen because imagine it takes I think it can take 3 to 12 months basically for like the CME or one of the major exchanges to decide to actually launch a market. It's not cheap to do. It takes a lot of legal and business development work and so forth. And so if you have infrastructure where you can just spin up a market really niche, maybe it's just a market that runs for 3 days to hedge a specific thing, I think that there's a lot of room for experimentation there as well. So that pretty much concludes what I wanted to take you guys through today. I'm not sure, Anthony, how I've gone for time or if there are any questions.
I think we have a few questions in the chat. Do you want me to read them out for you, Tamlyn?
Yeah, sure. That would be great.
Sure. So there's a question from Scott asking, why does Vega use its own blockchain and not Ethereum?
Yeah, really good question. So there were a bunch of design properties. So we started actually with design criteria when we were thinking about Vega. So it was like, we knew that we wanted Vega to be able to be used for real world trading and risk. And so there are a few things that Ethereum, because Ethereum is built as a generalized computer, distributed computer, and we wanted very specific properties related to trading. So one of those being, for example, that we didn't believe, like when you interact with a normal exchange in the traditional finance world, you don't pay to place an order. But if you build an exchange on Ethereum, whoever is placing the order needs to pay gas. And we think that that's not really ideal, because actually you want order pricing information. That's a good thing for your market. Also, we wanted the market to be faster, so to have faster finality. And this was back in 2018, and Ethereum was sort of quite a long way off back then getting to a proof of stake system with faster finality. And that was important, as well as also we felt that a blockchain that was dedicated to trading on markets would be good as well in terms of managing congestion. You know, we didn't want the next CryptoKitties sort of craze to suddenly impact the sort of serious trading of institutions or individuals. So I hope that answers your question. But
I'm back, by the way. My Wi-Fi just suddenly completely went. This is the country side for you. Right, so George, we've covered the blockchain one. Right, so what are the biggest DeFi communities? It says outside of blockchain. I think outside of Ethereum is the actual meaning there. I can maybe answer that one. So pretty much all the other emerging layer ones are trying to build their own DeFi community. They're each kind of early in their journey, to be honest. Kind of like what Avalanche are doing, for instance, as a kind of one example. But each are kind of trying to both replicate what's going on with Ethereum and kind of add their own kind of flavor to it. You really have to kind of get involved with each. You kind of see fit. It's going to be really interesting to see what happens over the next kind of year or so in terms of other layer ones adopted. Etc. Obviously, what Vega are doing as well, like they are taking a kind of slightly different approach to doing things as well. So we might see that kind of compartmentalizing of kind of things you might want to do in the blockchain world kind of occur. What are the best trading strategies in crypto for beginners? Tamlyn, can you answer that? What's the political way of saying that? Answering that?
Well, so the very political way of answering that is to say that absolutely nobody can or should be giving you financial advice.
Exactly.
I actually think, you know, I've traded for many years and I've taught many beginner traders how to trade. And I really think the best thing you can do is be brave, but try and find a test net without real money and paper trade as a starting point. Because I think a lot of the sort of early steps in trading is getting over the initial fear, understanding what it means when you've put a trade on and then you see your position move, and just understanding what it all means. I think there's some really nice tools out there. I don't know, Anthony, if you went through some of those, but tools that are just make things sort of easy to investigate what's going on. So I think, you know, with trading, it's like you really want to spend quite a lot of time just looking, absorbing what's going on before you actually pull the trigger as well. You just want to understand, you know, what does it mean when I put my coin into this pool? What's actually happening? And the brilliant thing about the crypto world is there's just so much great community and information, and people are so nice and willing to answer questions. So sorry, it is a little vague, but that's because
I think that's I couldn't have put it better myself, which is why I did not answer the question. Can you tell us some exciting blockchain projects coming up soon? I think we shared quite a lot of cool smaller ones, but maybe I'm going to hand over to Tamlyn again. What kind of new stuff coming are you excited about in DeFi?
That's a good question. I mean, there's all sorts of weird and wonderful things. I don't know how many of you are on Clubhouse, but I just tend to go and lurk there. You know, I'm quite interested in the intersection of NFTs and DeFi. I know it's a sort of hot topic at the moment, but I can't help being interested in it. There's charged particles, it's kind of cool. But yeah, I don't have off the top of my head. Radical's cool. It's like a decentralized GitHub thing, but that's not really DeFi. Yeah, I don't know. It's a good question. If you come and hang out in our Discord and ask us that, you'll crowdsource a whole bunch of all the team's favorites. But yeah, it just feels like things are springing up every day at the moment too, and that's really fun.
Yeah. It actually links quite neatly to I had a question about NFTs, which I very much did not answer whatsoever. So just to kind of very quickly, if anyone wants to kind of learn about NFTs, the best way to kind of an NFT for those mentioned last week, but it's called a non-fungible token. It's a kind of a unit token. The best way to think of it is like digital art. Is stuff that's art that has digital representation. You kind of prove that its authenticity kind of in its design, quite frankly. and you've got cool things, and I implore you to kind of go and see just some place and look at the cool different things that are NFTs. And kind of, the prices are a bit mad, kind of take that away, please do not speculate on NFTs, but there are some really cool things there. So if you want to learn about NFTs, we'll probably cover that in kind of future events. But I honestly recommend go to OpenSea and just have a play around and see. A cool project in that respect is the winner of the last hackathon, the finished a few weeks ago, 0xMons. Classic example, student playing around with GAN generated monsters, and these are kind of neural net generated kind of little bits of images that look a little bit like monsters that he's kind of built a whole kind of ecosystem around, which is really cool given he's just a student, and that's doing particularly well. If anyone wants to kind of check that out. What else we got? Betting in crypto. Well, trading is not betting. Trading is more sophisticated betting, but we've kind of covered maybe the mentality of it. If anyone wants to check out some cool betting projects, once again, if I share my screen, the most kind of original one is something called Augur. This is one of the first ones to kind of emerge. Kind of one small problem with betting crypto is that it's if you want it, yeah, it's usually gas prices screw you a little bit for kind of the fun, small, little kind of bets that most people kind of like doing with sport. Augur is a good example. The one that's kind of gained a lot of popularity recently is something called Polymarket. They got a lot of kind of they got a lot of traction around the election. That's kind of cool to play with. There's still a market on one will be president if you want to get your like 99% chance of it not being the case. I want to get your 1%. Will Joe Biden be president? There are still people who believe that Joe Biden won't be president. Those are two examples as well, and many others that are kind of popping up and emerging that you can kind of, for any of these projects, if you want to kind of look into it, these meant to be a haste. I don't endorse any of these projects. It's just cool stuff that I've seen along the way. Check them out for yourself. Check out other things. If you want other recommendations, please do message me. That probably seems it for questions. We've run a little bit over time, but that's absolutely fine. So thank you all for coming. Tamlyn, thank you so much for well, not just a very good kind of introduction to kind of trading Vega, but a very good general ecosystem overview as well. That was yeah, very nice, and I think complemented the kind of more website-based stuff that I was doing, and just kind of showing people projects. So thank you so much for your talk and for your time this evening. And if you want to ask the Vega team anything, please do kind of head over to our Discord, to their Discord. Yeah.
Absolutely. Thank you, Anthony.
Awesome. And to everyone else, next week is MA with founder of Tezos, Arthur Brightman. So do join us for that, and do head on to the Discord. We'll put all the YouTubes and the Medium up later today, well, tomorrow morning, maybe tonight, but likely tomorrow morning. George has pasted the link there. But thank you everyone for joining us. And yeah, speak to you all soon. Thank you for joining us, and looking forward to seeing you at future events. Thanks all.